ecosystems. And for that, I'm grateful here at Culture Banks. I want to thank all of you guys who are watching right now. And there are a lot of gems that are getting ready to be shared around Black fund managers and exactly what it takes to create your own fund. So for everyone joining in the audience today, please know that you all are the key to normalizing these type of Black wealth conversations. So thank you for not only being with us right now, but for joining us in the great work ahead. We do have a lot of work to do to make sure that Black fund managers are normalized within this venture capital ecosystem. I'm Corey Hale. For those who don't know me already, I'm the CEO and co-founder of Culture Banks, and we are going to unpack the importance of Black fund managers and what that takes, the people that are most committed to equity and inclusion along the path to building wealth within our communities. I'd like to start by having Jamie Sears join me. She is the head of community affairs and corporate responsibility for UBS Americas. Hi, Jamie.
Hi, Corey. Thank you to you and to Culture Banks again for your partnership on this incredible series.
Yes. Well, we, of course, are excited to be partnering, and it's such a needed conversation series. So we're glad to be doing another one. But I'd love for our audience that's joining us now to hear directly from you. So can you tell us why this type of inclusive capital is a primary focus for UBS when it comes to elevating entrepreneurs?
Yeah, absolutely. I was so inspired by the first conversation we had on normalizing Black generational wealth, and super excited for the event today with two trailblazers really committed to getting more funds into the hands of Black founders. So through our UBS Elevating Entrepreneurs initiative, we're on a mission to create a more inclusive landscape for female founders and founders of color. And this includes providing, obviously, access to training, resources, and networks that they need to build their companies. Capital plays such a critical and core role in determining entrepreneurial starts and successes. And unfortunately, capital flows continue to be really inequitable. Just over 1% of the money that goes to startups is managed by women and people of color. That's it. So as a result, this trickles down to fewer investments in companies led by underrepresented founders. And, it's 2020 and we're still hovering at 2.6% for Black and Latinx founders. So we know that to get more capital flowing to these founders, we need to see more racial and gender diversity and who gets to manage and deploy that capital.
Yeah, absolutely. And I know that Project Diane actually just came out with their report again, highlighting essentially the wide disparity amongst the Black and Latinx founders that receive funding. And they didn't really dive into fund managers, but Keisha and Bahia coming up, we'll talk about it more. What are you, Jamie, though, most excited to hear from today's conversation? And what are you hoping that people who are tuning in right now are going to be able to take away?
Even before this year's racial reckoning, there was a call to change the culture of venture capital. So while there remains a long way to go, I think the women we'll hear from today give us reasons to be optimistic. Keisha, Cash, and Bahia Robinson are really at the forefront of the sea change in venture. Keisha's just closed her $55 million fund, which is a record for a Black female-led fund manager. Not only is she changing the culture of venture, her fund is investing in early stage startups that have an outsized impact for LMI communities, low to moderate income communities, which is incredible. And Bahia very much is a systems changer. She's rooting out the systemic racism inherent in VC. We know that it really requires rewiring in terms of the larger ecosystem, and that's exactly what she's doing with her fellowship program. She's building both the capacity of first-time and emerging BIPOC fund managers and connecting them to this network that they're going to need of GPs and LPs that could be investing in them. So I just hope that people are going to come away as inspired by Keisha and Bahia, sort of by what they're doing in the way that I am, and really be moved to play a more active role in this work, mentoring underrepresented founders, connecting them to networks, writing checks, hiring more diverse talent, investing in the ecosystem. So as we continue these conversations normalizing Black wealth, we really need to turn to figuring out how we can address and redesign these systems that don't work fairly for everyone. We know we can't do it alone, and we know we have trailblazers like Keisha Bahia and working with you, Corey, to be able to host these conversations and really to make some advancements this year.
Well, we are well on our way. Thanks so much, Jamie.
Thank you, Corey.
Oh, all right, folks, let's jump right into our conscious conversation around normalizing Black wealth with VC fund managers. Our excellent panelists today include Keisha Cash, who is the general partner at Impact America Fund. She's got more than a decade of investing experience, and her complete $65 million venture capital firm invests in tech-enabled companies that create economic opportunities for low to moderate income communities of color all across the country. She is also the only, guys, get this, you got to soak it in, solo Black female fund manager to ever raise a $50 million fund. That's her Impact America Fund 2, which closed not too long ago. We also have Bahia Yasmin Robinson joining us. She is the founder and CEO of VC Include, an ecosystem of women, Black, Latinx, Indigenous, and LGBTQ plus fund managers and alternative investments. And her commitment to actually increasing the access to investment capital in diverse environments, it's been recognized by the Knight Foundation, Echoing Green, Entrepreneur, CNN, and even Forbes. Thank you both so much for being a part of this conversation. Want to bring up, here we go. We see them, Keisha and Bahia. All right. You guys both have such, first of all, incredibly impressive backgrounds, but what you're doing specifically in the fund management space, not just as women, but as Black women, is truly, truly unique. Keisha, I'm going to go ahead and start the first question with you because you have a very creative strategy for this new inclusive funding game plan that addresses what I would say is the major systemic issue in getting capital to founders of color, especially since the majority of venture capitalists don't look like you or run any type of mission-driven fund. Can you tell us about your path specifically, Keisha, to becoming a venture capitalist and a fund manager, along with the unique space that Impact America Fund operates in?
Yeah, absolutely. And thank you for having me here. This is a bit of a deja vu to be with you ladies via virtual world, when this time, I think it was this time last year, we were actually all hanging out in Miami together.
Yeah.
I wish we could turn back the clock and go back to Miami. So
same.
Yeah, so it's great to see you. I'm glad that we're all still standing and looking forward to certainly what's to come. For me, venture capital, landing in venture capital and specifically impact investing, it's been a journey. So I don't think we have as long as I need to tell that full story. But the long and short of it is, I was born in South Carolina. I grew up in Orange County, California. And through my upbringing in Orange County, California, had the opportunity to see kind of two sides of the railroad track. Our family was low income, yet I was exposed to upper middle income, wealthier environment, and benefited from that, from great public schools, et cetera. Attended UC Berkeley, majored in mathematics, thankfully was accepted into the SEO program as an intern, and that started my career in finance, and worked on Wall Street for 2 summers, and then worked here full time. And then after that transition from that experience, made an intentional decision to transition back to Main Street. So I started working with small mom and pop types of businesses in LA. And it was at that point that I acknowledged and realized that there was a wealth of opportunity that was untapped and overlooked, and started to noodle and figure out, how do I combine my passion for business and finance and what I had seen on the other side of the railroad track to help founders that were just as ambitious as everyone else, but had a lack of access to resources into the ecosystem. So fast forward, out of that really became Impact America Fund. It didn't happen right away. I attended Columbia Business School. I worked in London at Bridges Ventures. I came back. I met Josh Melman, who's a longtime investor. We started doing work together in sort of a virtual format, so to speak. It wasn't an actual fund, but we were working off the balance sheet of a very large family office. And then fast forward, that family office and Josh Melman, as well as others, anchored Impact America Fund 1. And thankfully, we just closed Impact America Fund 2. So it's been a journey, but a blessing to be able to combine my own life experience, my passion, my knowledge of finance in a way that, for me, I get up and do this work every day, not for the big reward that I think will be on the other side because we're investing in great companies, but because these companies not only care about making money, but they care about low and moderate income communities.
Yeah. And Bahia, let's bring you into this as well, because your background, which I didn't go into in the opening, but it's super duper diverse as well. And what you're doing in terms of building up essentially thousands of Keisha Cashes in the future is very, very unique. Can you just tell us a little bit more about it?
Absolutely. And again, I won't say this enough, to big congratulations to Keisha for Impact America Fund 2. It's just absolutely continuing to create a ripple effect in the ecosystem, which is so important. Just a very quick snapshot of my background and kind of how I got to start VC Include was was a journey as well. I really started on the social enterprise side in the late, I don't want to date myself too much, but let's just say, but by 2010, I was working in Africa, starting impact investing, first with co-investing with the World Bank and State Department in the first generation of tech entrepreneurs in Africa. And I really started to see myself in hindsight as an ecosystem builder because, Africa, as an example, is such a large continent that when you think about how do you build a technologically enabled environment and investment environment for, these new technologists and these new entrepreneurs, it's less of where's the money and it's more of where are the conferences and the tech hubs and kind of the infrastructure. And so how do you build that ecosystem? So I got my hands really in the weeds of that. So helping to build, creating partnerships to build some of the first conferences and the first tech hub networks, and then also started making investments. And so when you look at the Africa story as a side, it's now you're starting to see all of these kind of acquisitions, right? And like larger multi-million dollar investments where 5 or 6 years ago, that was like a pipe dream. And so very excited that ecosystem has been able to birth and grow, new founders and new solutions to local problems on the continent. And I really took that model. And as I came back in 2015 to, the US and realizing that at home, underrepresented and women-led founders were experiencing that same lack of ecosystem and environment to really grow, I kind of dug into that. So a couple of years into that journey, around 2017, I had a decision to go into a fund, which I'll say, long story short, I did not do that. But it's when the fund side really came to me as a solution to actually amplify and accelerate investment into founders at scale, because that really is my why. It's like, how do you kind of, create this enabling environment? Well, I realized that the ecosystem on the ground, as much as it's great to build these cohorts of all of these underrepresented founders, the actual challenge was the supply chain of capital. Mm-hmm. So when you got to the fund manager level, and I would work with one of the less than 30 Black women at the time that had raised over $1 million. It's now like 90. They're like 3 times more. It's like it's a 90 out of 23.5 million Black women have raised more than $1 million. I know data matters and the 3 times matters, but it's still under 100. And so I just want to, make that, I always try to make that clear that the numbers are so minuscule. The fund manager kind of layer of this is so important because, I said this offline to Keisha, and I've said it a couple of times to several managers, we need 1,000 of you, right? So we need, 100, 1,000 Keisha Cashes with 50, 60, 75, $100 million investing in these opportunities that are sitting there in our country and even globally to really create the social impact that we are looking and we're, dying for, and kind of literally right now, as well as the financial returns that are there. It's like these artificial limits and barriers to access wealth and wealth creation and supply chain of capital, they just simply don't need to be here. So I see myself as an ecosystem builder. I started VC Include a few years ago now. And it was really with the hypothesis of how do you support managers to grow and scale their funds, both from a, internal back office, position, but also from a kind of marketing and social proof position with LPs. And then how do we actually work with LPs to kind of, create smoother pipelines and pathways to investing in fund managers that are emerging managers of color at scale.
Yeah.
So that's my quick journey. Left out a lot of things, but yeah.
No, well, the journey is super impressive and very, very interesting. I mean, I myself have a background in investment banking before I moved into media, and then of course into entrepreneurship, which a part of that is actually how Keisha and I got connected through one of her LPs in her initial fund, and through his nephew who used to be an intern here at Culture Banks. And I think what's so interesting about that sort of story and the way that Keisha and I got connected, which is almost 2 years ago.
Mm-hmm. Yeah, that sounds about right. Yeah.
Right? Was it that long ago? Goodness gracious. Oh, goodness. But when you think about what it takes to build a fund and how important LPs are, but how difficult it may be for Black people who want to start a fund, right, to tap into different LPs. I mean, Keisha, what do you see as some of the solutions, right, around potential new Black fund managers coming into trying to get LPs for their funds?
Yeah, that's the big question of the day. And I talk to, I have conversations probably every other week now with new emerging managers about how to raise a fund, how to get, those anchor LPs. And there's not a formula to it, to be honest, that it's really about finding your people, finding the people that believe in your thesis, that believe enough in you to give you, kind of that early, in some cases, similar to entrepreneurs, seed capital, who's going to catalyze this effort. Many emerging managers, which, I include myself as one, we aren't transitioning from kind of big corporate funds and rolling out and launching a new fund, which, tends to be a little bit easier, still challenging when you have the track record of a large institution behind you, you have a network. And so we're doing everything from scratch. So we're identifying those anchor LPs, we're identifying and working with and building relationships with large institutions like foundations. And those relationships take years to build in some cases. And rightfully so. I mean, you are becoming a fiduciary for someone else's money. And those people want to know that they can trust you, that you have a real thesis. And I think the bigger part of it is that you're truly committed to it. This game is fun. Like, I can't imagine doing anything else, but it's a job. I manage a business. I'm responsible for paying myself and 5 other people. I'm responsible for my annual audit to make sure that I produce the documents that are required per my LPA, my limited partnership agreement. I'm responsible for making sure my LPs have their tax documents on time. So when that the investing part is the sexy fun part, but to be a fund manager, you have to be willing to manage a business. And that takes time for people to understand your capabilities of managing a business, your desire, your commitment. So it's really finding those early supporters of people that trust you, that believe in you. And then from there, once you can prove it out with your early supporters, then others will follow. But there's not a trick per se to get there. It takes a lot of networking, a lot of conversation, a lot of meetings to find those right people.
Yeah, no, I mean, it definitely does. But here, I want to ask a little bit more around wealth and Black fund managers, because to Keisha's point, it takes lots of meetings. You know the same thing as well, Bahia. But when you look at how you can actually tap in, right, to people maybe within your community, within your network, it seems like a lot of times Black fund managers, there just aren't enough Black billionaires necessarily in the world, right, to tap into, to become an LP for your fund. And I want to just give our audience really quickly a statistic that the Peterson Foundation found. Among college-educated households, white families had a net worth of $360,000. Latinx families had a net worth of $73,000, and Black families came in with a net worth of only $68,000. So, but here, is it possible to effectively, right, invest in our culture with Black fund managers when the wealth disparity within our community is so great?
Yeah, I mean, the way that you put that question is interesting, and even that data point. I mean, there's a lot of different data points. I'd say that's probably one of the better ones in terms of the gap. I've seen some data that says for every $100 of white wealth in the U.S. that Black families generationally have 1 penny. Like I've even held up the penny and the dollar in certain kind of investor conversations, right? So, I think, obviously data matters, but it's a massive gap, and it's a massive gap because of a lot of, just history, right? One thing that has been on my mind lately is Tulsa, for a number of reasons, the kind of, media attention on Tulsa, but also because Black Wall Street was there, right? So a lot of people now know about that story and history of, enclaves of Black wealth and achievement over the last 100+ years post-emancipation that were just terrorized and burned to the ground, right? So there's been a lot of leakage, if we want to use financial terms, in our community, and that has not been our specific quote unquote, it's because we are not good at money, like we're not good at managing money, et cetera. It's actually just been kind of taken from us. And so, at the same time, you look on the other side and we're the biggest value creators and wealth creators for other communities, whether it's through, hip hop and media and and sports and all of these other things. So, I try to look and typically look holistically of what can we do. In terms of Black LPs, there's definitely, a very small handful of folks in a position, and it's really important to say in a position to really invest capital in a venture capital fund, for a few reasons that some of the larger LPs kind of talk about, which is the risk piece, which then circles back to Keisha's point about really having really strong relationships and building over time the trust for instance, for managers that come to me and say, we're trying to close our fund in 6 months or 3 months, or, we have a quarter, can you help us? It's like, no, I'm not setting ourselves up. Like we're growing best in class managers over the life cycle of their funds. This is a decade, right? That we're working with managers, fund 1, fund 2, fund 3. They're coming to us at one of those, points, whether they're raising their first fund or they've already raised a fund. It is equally, well, maybe not equally hard, but extremely hard to raise a fund for a woman, and specifically for Black and or Latinx fund managers. And so building out that network, building out that trust, making sure that the markers of other LPs that are also a signal in the system. Oh, you have that LP in your, on your cap table. Okay. Now you're kind of validated. All of those things take time. And for Black LPs, there are some, and they are invested in some new managers, but they don't have the level of wealth. We're talking about, a 10 or, $20 million, kind of AUM, maybe foundation. And that's, again, a large one compared to billions of dollars with most other, large family offices, or at least hundreds of millions. So the scale, the amount of managers, the amount of Black LPs, and then the scale of capital they actually have, because most of them have been they've basically generated their wealth in 1, maybe 2 generations, but usually first generation wealth creators. It's a trickle down. So this is a leapfrog moment, in my opinion. These next 10 years, again, for us to build and grow 100, maybe even if we don't get to 1,000 Keisha Cashes in the next 10 years, is what's going to create the type of fund managers that then can be LPs into other funds that then invest in more, founders, right, at scale. And so, I'm looking at where are the next, IPOs, what are the next, acquisitions, where Airbnb and DoorDash and all of those folks that started 10 years ago are now exiting. How can we do that now around, gender and racial ethnicity at scale? Because, otherwise we're going to be in a much less safe, much less abundant, environment. It doesn't have to be that way.
No, it definitely doesn't. It's an unfortunate situation that we find ourselves in as a community, as a people, when it comes to getting that actual access to capital. But we do have people like you, Bahia. We do have people like Keisha and several other fund managers that have gone on to raise, significant funds. But when you put it into perspective and the actual amount of money, right, that's floating around the venture capital space, it seems like we're still not necessarily getting, the amount of money needed to make a lot of capital injections into some of the great founders who are creating really the future. They're creating the companies that we're all going to be needing and using, from the moonshot companies to the everyday companies. I know one, Keisha, that you're invested in, that Samir and Abby have, Isusu, and the great work that they are doing. But I know from their own story, it was very hard for them to raise money starting out. And I know that a lot of their investors actually happen to be people of color. Do you think that's because, the majority of not just fund managers, but venture capitalists, happen to be white? The next highest percentage is, and that's 70%. The next highest percentage is Asian Americans at 26%, and less than 3% of VCs, clearly even lower than that for actual fund managers, are 3% Black. Do you think that there's still an absolute gap in understanding why prioritizing underrepresented founders creates an untapped market opportunity for many funds?
It's a yes, and I'm going to try to, this is my first time trying to explain what I'm about to explain, so bear with me.
Okay.
It's a yes, and as I thought about in preparation for this conversation, there's really a class difference in venture capital. And I think what we're talking about here in terms of the racial wealth gap is it's so important to understand that. So as an example, when I went to Columbia Business School, I quickly realized I attended Columbia Business School to learn how to create wealth, to learn how to launch a venture capital fund. There was another group of students at Columbia Business School that came there that already had wealth, and they were coming there to learn how to manage their money and to grow their money. Those are two very different reasons for attending, Columbia Business School. And when I, now what we're seeing in the venture capital industry is similar, right? So there are founders that would be happy, and we'd be happy for them to sell their company for $100 million in 5 years, and own, 15, 20, 30% of that and have a payday. So it's, that capital means something when you're talking about 6 cents on the dollar between Black wealth and white wealth. If I can walk away with 10, 20, $30 million in 5 years, that is a lifetime change for me and my family. And then we begin that generational wealth component. We begin to invest it and build on that. The majority of the people in the venture capital industry already have money.
Yeah.
They've cashed out. They've sold $1 billion businesses. There's some venture capital firms, you will not become a partner at that firm unless you've grown and sold $1 billion business.
Yeah.
Many of them that start their own firms are starting it with their own money or their friends' money and their family money. And so it's tough because the expectations, when the majority of investors' expectations are, hey, we have money. We're not looking for a $100 million, $250 million exit. We want a $500 million, $1 billion exit because we're trying to grow our money. We're trying to take more risk. And so there's literally this friction that we're not talking about between new entrepreneurs and entrepreneurs of color and what wealth creation means for them and what's realistic for them and what's appropriate for them, and traditional players in the space that have already made money. And so another $30 million may not be as important for them, right? They're looking for the $300 million. And so we have to tease that out. And what I'm excited about and what's important, I talk to new fund managers that are creating new models. There are revenue-based financing models that are models that are saying chasing a unicorn isn't the end all be all, nor is it necessarily appropriate for the majority of entrepreneurs of color that are currently entering the space.
Absolutely. And I just want to piggyback on that because it's such an important distinction, and you did a perfect job of just, succinctly explaining it, because it happens at the founder level and the fund manager level. Mm-hmm. So exactly what you explained is, the average, and several other people talk about this, of to the unicorn point, they don't necessarily want or need to be a $1 billion company, but a $200 or $300 million company, would be great. I mean, that's like a complete leapfrog, right? And it will return, serve as a healthy return to, the investors that are invested in their businesses. So it's not like, there's any, it's not a bad investment. It's just not the type of moonshot investments that, again, when you have that much wealth that you can put in $5 million, and it's not, it's a also rand. As in finance world, it's a rounding error is what we like to say, right? It's a rounding error, right? But $5 million for underrepresented, like that's, half of some people's, or at least a full fund for several, micro funds. Like that's the whole fund amount is $5 million for an underrepresented, fund manager in Ohio, in Dayton, to have a $5 million fund to invest in local companies. Like that's a huge thing. So, looking at both, as you said, the different models, and, I know we're talking about VC as kind of, we talk about venture capital as a structure, but that's not necessarily the best structure, again, for every fund. We work with venture capital and impact fund managers. So we're really interested in the type of different funding structures and models within and kind of between those two themes, right? Because impact is really a thesis or a strategy, and venture capital is really the fund structure. So I play around with that when it's like VC it's including all these other things. It's including women, it's including, underrepresented fund managers, but it's also including new models around venture capital and how you invest into founders of color, underrepresented, in an inclusive way, because we also don't, and I don't know how much people, LPs talk to you about this. It's like, I want to shift a bit into, because of the zeitgeist of 2020, there's been a huge shift in investment into fund managers of color and into women that we've witnessed. And it's been just this year, a lot less talking, a lot more of like, we have, trustees sign off. We really want to invest in, either a slate of managers, or we want to start investing in underrepresented founders at scale. And we've got $1 trillion, we have, 500 billion. I mean, we're these large investment firms that are trying to figure out how to invest in early stage founders. And it's an interesting conversation because they haven't really figured out, one, again, they don't know where to find, these founders. They're asking me, I'm like, we're working with fund managers. Those are the ones that know how to find the founders. So invest in them. But there's this trajectory and there's this trend now that I think, because we're all stuck and people are kind of thinking a little bit more deeply about this topic, that there's capital flowing. There's capital flowing to fund managers. I mean, I don't know if Keisha, you want to talk a little bit more about that, but I've definitely seen, and we can see in major banks, there are commitments to investing in funds and founders. Basically every major bank, most of the major investment firms and consulting firms are also getting a lot of shareholder and client, pressure to make sure that there's diversity within their portfolios in alternative asset classes, in impact, making sure that ESG is not just the E or the environmental part of environmental social governance, but also the S, which has never been really unpacked. It's always like, well, S, whatever, environment, but they go hand to hand. And so it's a little bit of a ramble, but I think those are other markers that people don't talk about. That rounds out this picture of why underrepresented founders and fund managers have had such a tough time.
Yeah, you know what? I think actually, Keisha, it would be great if you could maybe give us just your take on what do you think needs to happen. And I'm talking about from the ecosystem perspective, from ultra high net worth individuals, advisors, and people that are just a part of the general entrepreneur ecosystem. What needs to happen on that front to help more funds that are run by people like you scale in the future so that, the next I don't know, $100 billion fund that, Masayoshi's son is trying to run or created is, done by a Black person.
Yeah, it's it definitely requires an ecosystem. So one example, right, where Black families may not have or be in a position, nor should they, invest $5 million into my fund. But I was able to launch Fund One because a cashed out Black entrepreneur who had sold a company for a couple $100 million, and he owned a good percentage of that. He could write me a $75,000 check to have that cash to actually go get started, right? And now I have a Black female LP in my fund. She didn't write me the million or the $2 or $3 million check, but she wrote me a check. And her goal, as she continues to build her wealth, is to become a larger LP in many funds. And so I think, and I know there are a couple of Black LPs out there that are in positions to write up, $500,000 million check, which is fantastic. So I think starting from where you're at, there's so much need in the ecosystem, whether that's providing seed capital to a fund manager, an entrepreneur, or playing a little bit bigger, or getting in the game. The Black female LP that I have in my fund, her goal is to get in the game, and we allowed her to come in for less than our minimum because it's important to have her in the fund for her to understand how fund investing actually works. So there's this constant, we're not just building a fund, there's a constant learning and iteration that's happening between me and the LPs, between us and our founders. We're all figuring it out. We're new to the game. I have really great, smart people around me, but we're new to the game. And I think understanding when you're new to the game, there are things that, it's going to take some time to figure out, but the ecosystem is important. If anybody reaches out, and there are fund managers that reach out often through my network or to me directly, I'm taking their call. I've been having a standing Sunday call with a fund manager, a Black female fund manager, who is creating a revenue-based model and has raised, more of a kind of a traditional entrepreneur round, a Series A round to fund the model, and then has a debt component. So we started meeting probably 2 months ago every Sunday to get an update on the raise, and she's telling me who she's talking to in the LP ecosystem. I'm back channeling, and they know I'm back channeling, and they're looking for me to back channel for her, right? That's how the game works.
Yes.
We trust Keisha Cash. We're invested in her fund. So to the extent that I can put a call out or an email out to accelerate that process with someone they don't know as well, then that's my obligation and what I'm supposed to do. So I think the ecosystem part of it, the wealth building is going to take time. I loved, Corey, the last episode you did with Mark Wilkins and Master P, and Mark saying, like, this is the long game, right? Like, to really create wealth, you have to be in it for the long game. And I think how we perform on the journey is what's going to matter, so that we are in a position to raise that $100 billion fund 10 years from now, to what Bahia said. So we are in a position to have our IPOs. But let's be smart about it and make sure that we're not trying to get the quick hit, because this is generational wealth. It takes time. Let's be smart about our agreements. LPs and GP agreements are important agreements. Read every detail of those agreements. For founders and their investors, you read every detail, because those are the things that are going to matter in terms of empowerment and us actually having control and decision-making power to build our wealth.
Yeah, well, speaking about being very, very smart about it, this is audience where it's your opportunity to start building up, the next great fund run by a Black person or a person of color. And that is with Bahia's VC Include Fellowship Program, which I don't want to give away too much because I don't know a ton about it, but I know that it's coming very soon. Bahia, can you just explain a little bit more about the fellowship program?
Sure. I mean, thank you. It's the perfect segue into, reaching our goal of building generational wealth at scale over the next 10 and 20 years. one of the things that in talking to both sides of the market, the GP side as well as the LP side, I realized a couple of things for a lot of first-time funds and first-time managers that were coming to us, again, wanting, can we get that first, $1, $2, $3, $4, $5 million in, particularly if they don't have the track record or it doesn't necessarily, it's not a VC track record, et cetera. It's not necessarily completely aligned with their new thesis or strategy. The how-tos were more than, when they started asking for the money, I'm like, well, what's your structure? What's your fund structure? What's your back office look like? Send me your deck, send me, who your fund admin is, compliance, legal, all of those things. I started realizing over the last 3 or 4 years that there were some gaps, right? And not with everyone. I mean, something that Keisha said earlier is really important to know. This is not just a long-term journey, but first-time managers don't know what they don't know. Even if they're coming from financial institutions, or even if there were operators that have had an exit that want to now start a fund to invest in the type of companies that they know. And so I realized that what could be a big game changer, particularly for BIPOC fund managers, is, a 9-month accelerator, fellowship program that really focuses on where are the gaps. And every manager, similar to founders, have different, challenges or gaps or things that they don't know. And so being able to build a, unique cohort of best-in-class fund managers that we're instrumental in helping them grow through the life cycle of their funds was something that is part of our mission and building the VC Include infrastructure. We're opening applications on December 14th on Monday, and we are going to close those applications on January 15th. So you have the holiday to apply, and then we're going to choose 10 to 15 funds to support with LP showcases, with a lot of back office support, with best-in-class leaders, GP mentors, et cetera, to give them the support that they need to kind of ensure that their fund is structured the right way, and to give them a leg up in terms of LP connections and really building those deep relationships that are required for investment. And so we're really excited about that. So, the platform still supports fund 1, 2, and 3 managers kind of across their strategies. We've got the VCI Fellowship supported by UBS, Visa Foundation, and a number of other family offices and foundations. And then we're looking at opportunities to invest in funds that we have high conviction for. So that's kind of the next kind of coming up.
That's huge.
Yeah.
And definitely the stepping stone for everyone watching right now. It's like, you know what? I think that I have what it takes to become a fund manager. I do have more questions that I'd like to ask you guys, but I want to quickly get into our audience questions since we don't have a ton of time left. Oh, and these people have some really good questions. I'd like to say they're getting into the nitty gritty of like, this is what we really want to know.
Let's go.
About being a fund manager. So Keisha, this question is for me, for you. What are some of the hardest challenges that you faced while starting your first fund that you feel were unique to you being a Black woman? That, perhaps a white man starting a fund wouldn't have had these same challenges.
Yeah, it's, I was fortunate that, and I worked my butt off for it, but I was a part of a large family office structure in New York. I met Josh Melman, who I mention a lot because he catalyzed this effort for me as family endowed the Mailman School of Public Health at Columbia. So I met him while in business school at Columbia and had the opportunity to essentially start kind of fund 1.0 without it being an actual structured fund by working off of his balance sheet. And then I was able to leverage that time, those resources, those connections to build relationships to then launch my Fund 1 and my Fund 2 and launched Fund 1 with their support. So for me, I positioned myself, thankfully, in a unique position that I think accelerated my ability to build those relationships really quickly. That being said, so I say all that to say, I was in a kind of a special position, so to speak. I'm in the rooms with the money. I'm connected to the money. I'm being introduced to the money. But even with that, it took me a long time to raise the fund, because the concept of who I wanted to invest in, why I wanted to invest that way I wanted to invest, was quite different than what had been traditionally invested in. So it took a lot of time educating that network, which is, was primarily at the time impact investors, on, what does impact mean for lower moderate income communities, which wasn't a part of the conversation, unfortunately. So for me, it was certainly me being a Black woman doing this work. For me, the challenge was more around my thesis around, why does it matter that a Black woman gets an additional $50 a week? How is that helpful? Well, if you grow up low income, like I did, an additional $100 a week is quite helpful when you're living, at the poverty line. And so it's that type of education that has to happen with wealthy people oftentimes, because they, don't have the sense of reality that we're operating in.
Yeah, no, that's great. Bahia, this next question is for you. Someone wants to know, what are some of the skills that people actually need to be successful in creating their first fund? And I want to throw out there as well that it takes on average 12 to 36 months longer for entrepreneurs of color to actually go out and raise venture capital dollars. Now, from the fund perspective, how long does it take for someone to really kind of raise enough money for their first fund to be at a place to go out and invest and be successful?
Lots of different questions there.
Hodgepodge.
No, it's all good. It's all good. So, I'll try to start behind. Typically, again, we've covered this. There's two ways to start your fund. It's either with your own money, right? That you have the generational wealth or the exit that you can use that windfall and then start your own fund. And then just, several funds that I know cashed out and then said, I'm going to use $2, $5, $10 million of this to start investing, right? And even if it's not like a structured venture capital fund, they used it as kind of an angel fund one or a syndicate, or they kind of just started investing. That's just what they wanted to do. And then when they were successful there, then they kind of then went into a traditional kind of next fund. And that's either the fund one or the fund two. It just kind of depends on how they kind of structured it and how they tell the story. So storytelling is important. I'd say if you don't have capital, you don't have generational wealth, then you need to, as we discussed, find seed investors, find folks that will help you, to establish the fund. So just to give you a sense, just to create the infrastructure for a fund is somewhere between, 250 and 500K, right? So that alone, you have to have that right off the bat to just get your legal, your fund admin might cut you a break and you start a little bit like once you start investing, but that fund formation, that kind of infrastructure of your fund, one, you have to be SEC, not regulated, but you have to file for your SEC license before you can really go in and say, I have a fund, or go out to the public and say that. That's a big thing that a lot of newcomers or new fund managers don't understand, that you can't just go out and say, I have a fund, and, on Twitter or on stuff that SEC could actually go after you for that. You're not supposed to do that. And it's actually illegal, right? Not just not supposed to, it's actually illegal to say I have a fund when you're not registered with the SEC. And so again, those are kind of things that are really important. And so again, if you don't have that capital, then you need to get working capital to actually get the fund formed. And then you need some capital to start making investments, right? So, it takes a lot of money, this is capital intensive work. And so, the difference between, a fund manager that's just talking about having a fund or starting a fund, which we get a lot of, and a fund manager that's actually, set up the fund, has started investing and then still trying to raise or get to what they call a first close, that's a big hurdle. That's like hurdle number one. So before you get to the final close, you have to get to their first close. And so we have a lot of really high conviction, like amazing fund managers that have great track records in a variety of different, traditional and non-traditional ways, that are either just trying to get to their first fund of their, the first close, of their first fund, or just trying to close a fund. They're past the first close, but they need to get to a particular threshold to keep investing and then raise the next fund. So, understanding just that piece, which I typically talk to one-on-one with fund managers, is something that I'm sharing, with folks that are like, I want to start a fund. It's like, you have to know what it takes to do that. And then you also have to plot out and create a strategy for, again, this is not a turnkey, as we keep stressing, Keisha and I, this is not a 6-month, 12-month. It takes, the average white guy that, typically can raise a fund 12 to 18 months to raise it. Some raise it, in shorter time, because again, they have their own money. But it takes 3 to 4 times longer for an underrepresented fund manager to have that raise. So how are you going to pay yourself? How are you going to pay your team? So now that 250 to 500 that you just need to form is also, how are you going to pay your bills? Right. And so there's all of these considerations that have to be built into your strategy, your fundraising strategy, that we look for when we talk about having this ecosystem of, the largest global ecosystem of best-in-class fund managers. The best-in-class piece is understanding what a fund takes, and even if you haven't gotten to that first threshold, that final close, you have plotted. You have, you've done your due diligence on the fund side, knowing how you're going to actually build that fund, how you're going to storytell, how you're going to market it, how you're going, all of those things. It's really, it is tough work. I mean, the investing piece, as Keisha said, is one side, but the management of the fund is like a critical point. And a critical part of being a fund manager. And so people have to have conviction that you know how to build and raise a fund, and that you're going to be a steward of that capital that they're investing in you, whether they lose it or not, that they have high conviction that you can make the investments that will make them money.
Yeah. Well, it seems like a lot of the stuff that you guys have been saying over this past hour, I mean, the amount of work that it takes to be a Black fund manager, but we know that it's possible. And we have, ecosystem builders like you, Bahia, doing such a great job of ushering in the next generation of fund managers from underrepresented communities. And of course, we have Keisha Cash, who is trailblazing out here for specifically Black women fund managers, and setting the bar quite high, for the ones coming after you, but you're clearly reaching back. And I actually didn't mention, but I know that you do this because I know a lot about Keisha Cash and her America Fund, that she actually is also making sure that the people that work within her company, are moving up the rungs of fund management. They're not just, employees that are kind of in stationary roles within the fund. So she is also helping to groom, the next generation and usher in that next generation of fund managers of color, which is super duper dope. And I hate to do this to everyone, but we are out of time. I just want to thank Keisha and Bahia again for your time. It's so greatly appreciated, especially in this desperately needed conversation where people are able to get a very candid and real sense of what it's like to be a fund manager and what it takes to become a fund manager in the future. So thank you guys both so much. And for our audience, I want to let you know we'll be back with another Normalizing Black Wealth conversation at the end of January. We're actually going to be speaking with the head of the $100 million New Voices Fund, along with the first Black woman to ever raise a multi-million-dollar Series A round coming out of the state of Louisiana. The name of her company is Resilia, and you guys can look out for that information coming to you guys soon. Thanks so much, and we'll see you again on another Culture Banks' Normalizing Black Wealth conversation.